Well, here we are, up to Friday. So let's check out how we performed over the night. Let's throw up what we did. So our bias was from 2 o'clock yesterday that we were either going to come up and grab the liquidity around the 61,900 mark, or we were going to come down and tap around below 60,800 to move higher. That was the area because we are within this current range, as we can see here. So within this, we've touched down, we've rejected, and we've bounced between, and we are looking for shorts from this area between 62,200 with a liquidity zone at 62,950 is probably going to be the highest that we're looking at in this current moment until we can get a little bit more confidence from that. So what we can see, let's just trim it all out. So we did manage to come from here, we came down, we swept those three liquidity price zones, we rejected off this last one, did we? Let's have a look. 66.21 and the low was 66.23. Yeah, so we did. So we managed to wipe out all that. And we just took that out. So how epic is that? So we were able to acknowledge that, or notice that that was a liquidity zone to be grabbed to move on to this price to sweep these highs. So as I'm always talking about, prices moving from liquidity zone to liquidity zone, and it just bounces because it needs to bring in buyers into the market to move it to go to somewhere else, because we find an oversupply. The market's always trying to balance itself. So it moves from one imbalance to the next. So we were imbalanced, we moved, we swept from here, we swept those imbalances, those liquidity zones, and then it's come up, swept this one, this liquidity zone, and there was enough sells to sell it back. And it's found a little bit of equilibrium from 6 o'clock, so today's been relatively quiet. We can kind of see there is a short-term liquidity zone grabbed there where it's come up and taken that wick, but we've also still got this high here as a liquidity grab, but this is still showing, as far as its current moment, this is a liquidity zone and this is the protected high. No, that's not the protected high, sorry. Ooh. So we could consider this as a protective high, but the 64,500, 64,600 is pretty much the protected high, because that's where there was a genuine higher low. Oh, sorry, let me start again. There was a genuine lower high, so that was a high, that was a lower high. This is currently the next lower high, so we're not sure whether we are going to confirm this is a lower high by breaking this level down at 58,000. Being the 28th of the month, the last Friday of the month, we are looking at $6.6 billion worth of options to expire today. And at 57,000 is where, so below 58,000 is the max pain for those. So should they actually get liquidated, that'll be a very interesting and a very, very choppy evening leading into the American Open on the other side of the London trading session. So let's just have a quick look at how the day has looked. So we've come down as far as daily goes. We have nice and red. So we've swept this liquidity, rejected, and we've moved up. So this, as far as a macro look, as far as daily goes, this is still our next higher low. So we still, to confirm this as a higher low, we have to break back here in the high back on the 14th of May. So until we can assume that this is a high low, but we can't confirm it until that high is broken, because you need to lock in a higher high before you can lock in a higher low. But we're looking at this move down. We're seeing if we can find a little bit of support to move up, but with the expiry, it's going to be a lot of negative pressure because the liquidity providers want to see them get liquidated, because that means it's better that they make the money and the retail loses money. That's pretty much how it goes. So we're stuck in, as we can see, we're stuck in this range. Really, we've got sort of 3 candles all within themselves. There's Wednesdays did wick above a little bit, but it's very, very tight, quite consolidated. So is today going up or is today going down? Well, I'm actually not sure, but that's okay. What we can see is that, so let's work out the Friday bias. So Thursday's candle was, so it rejected off. It's still below that 618 resistance, which I still can't seem to spell after 3 days. So it was a bullish candle but rejected off the 618. So that's still forming as an emotional level of resistance. The awesome oscillator on the daily is negative, and is it slowing or is it? I think it's still steady. If I have to look that hard, it's steady. So it's negative, bearish, and steady. We are seeing the SMIO is negative, bullish, and it's coming up steadily. So are we going to see the SMIO going to come up and start to curve back down to the bearish direction, or are we going to find that we're going to wick up and come up and grab liquidity through here, which is an interesting thought that we might actually do. Alright, so let's move back down into the hour. So we can see that the dailies show that we were consolidating. The hourly is showing we're consolidating. We can see that we've got lower highs forming. We've got slightly lower highs forming up here. So that is showing confluence, not divergence. So that's not giving us much information in either direction. So let's just start putting in some liquidity zones. And then we can work out where we go from there. Be interesting to see how this one turns out. As it has only formed at 11 o'clock today, so we can see that we're still got 1.5% between our liquidity zones. So there's still plenty of price area for it to move and make a decision and form a few more candles. However, it could just come down, sweep some liquidity here to move up. But now we're getting a lot of interest in this area. So we've got a wicked, liquidity wicked, liquidity wicked, liquidity wicked. Once again, we've got more here. That's left on the table. We've got a 618, so that's a real zone. Okay, there is a real pressure that's building there, so it's interesting. Are we going to come up? Here are our two thoughts for the day. Are we going to come up and break up, back up to 65? Or I genuinely feel we're going to go up first. These are my two thoughts, because there is more liquidity. How we play in this space is the most important, because we are within maximum 1.2% from the 618, where we've got 1, 2, 3 liquidity zones. The 618 Fibonacci retracement, which is forming as sitting in a space of resistance, so it's an emotional space. So it'll be interesting to see. I genuinely think we're going to come up and we're going to challenge that. My bias is still negative, that we are still going to be bearish, especially with this Friday coming in. There's always more action occurring on Fridays. So after that, I do think that once that gets swept out of the market, there's going to be a little bit of bullish sentiment that'll come in for the Saturday, Sunday, but let's just wait and see how that goes. Obviously, we'll check in on that on Monday. Happy trading, everyone, and we'll see you Monday. Bye.